Hello everyone, this is Jem from Data Finance. Welcome back to our channel. We are with you on the last day of January, on 31st of January. Alright, this is the last day trading, as I said, of January in the first month of 2022. Alright, before we starting our charts, I hope you had a great weekend and we will just share some news with you first. Alright, this morning we have received the data from Spain. The inflation rate in Spain just declined from 6.5 to 6%. So it's a good news. Everybody was expecting the same, still expecting the same thing happen globally. But the key point is energy prices. If energy prices goes down, then we will see the peak of inflation in a lot of countries, and then we will see slight declines. Let me just go ahead with this one. In the middle of 2021, the oil prices was around $60, $65. And if we just catch $70, $75 level of oil, then the price difference, like in the comparison of previous years, will be just $10, and it's not a big difference because the base point in 2022 and in 2021 high level just made everything just seem really high. That was the point. If we just close the gap of oil prices yearly, month to month, and we will just get to low inflation area, but still energy prices will be high. That's still critical. Indeed, that will probably lead to an economic slowdown in 2022 and especially in 2023. That's the expected scenario. We will see how it will happen. All right, and then we have received the data from Eurozone area GDP growth. That was also as expected positive, but just 0.6. So it was really low. We may say the recovery of pandemic is done. Right now we will focus on post-pandemic area, how tourism, how services sector, how manufacturing will just go ahead, because there has been a lot of loss as human population in Europe. They will just focus on how to replace those casualties with immigration from other Balkan countries or some other African countries. They will just focus on these kind of things. Otherwise, there will be a problem in consumption, and then we will see contraction in coming years in European economies. We will see that as well in the coming years. All right, let's start with our charts. First chart is always dollar index. The first day of the first video of the week is dollar index, and as you can see here, dollar index is just digesting its gains. So by Fed officials, it has been and almost certain that in March the first rate hike will happen. Otherwise, Fed will just lose all the credibility in the market. They have signaled all that as well. Those one. In some analysts in US, they have a rising the expectation for rate hike from 3 to 5. That's really a high chance of that one. I see minimum 4 will happen because Jerome Powell said we have quite a lot room as the market right now is overheated. We have to act fast, and unemployment is really low. So we will just do this rate hike as soon as possible, and probably we'll just start in March. That's why dollar index is just rising, and as long as it's on the rise, it may test these 97,400 levels again in short term. But first, probably it will just make 96,600 these levels. It will just come here, and then we'll just make a correction. Then from these points we may see another rise, rally in dollar index. This week is important because we will just see non-farm payrolls in US on Friday and ADP on Wednesday. These two data will be critical for US markets and for dollar index as well. Just watch them closely. We have still a few days ahead of us, but these two data will be the most watched data in the market. Let's look at US oil, how it is trading these days.
You are ready to win with us. GAN Markets.
Alright, our second chart is US oil. You see, we have drawn these green boxes, when we start to see these accumulation, and right now it is just testing these levels. Why we have just drawn these green boxes? What was the reason? Let me show you once more. When we just hit first 85, and we have seen the same scenario, and then we have seen decline. There's a lot of pressure over oil prices right now. A lot of countries are just blaming these energy crunch as inflation is soaring. They just say, if we just solve the problem of energy, everything will be solved. That's the main issue. Just remember, if we have seen the similar scenario in Bitcoin, it's not the same, but similar. I'm just saying this similar scenario. It has made 65 first, then declined, and it made 68, and then it just declined. So the market just the things may be different, but the market just behave similar in some cycles. Right now we see high level of oil and it's rising, but it's get limited, and at a point the investor will just say, all right, this is the highest level. If I don't sell right now, I will just be in loss. Just take the profit. When that belief is common in the market, when the traders and the other investor just believes that the rally is over, there will be decline in short term, then they will start to sell, and that sell-off will start something like between, I'm just expecting 7th of Feb, on the second half of the contract, because just like this on here, on 20th of January the contract has started. From this point it just tested low levels like 82, and from 82 the contract of March contract has started, the February contract started, and like this it will just go on 22 of on here on 22 of February the contract will finish. So if it just goes like this, the investor, the traders, the people who buy the contract will make no money, and then they won't extend their contract, and then they will just sell off, and then a sell off in the market will start. They will just expect a lower level of oil just like this. Let me just show you the people who just buy oil 20th of December and then until to that one. It's just these line is just one term, one contract, and from these they have made $20, more than $20 with just one barrel. So one contract is 1,000 barrel. So they have made more than $20,000. If they don't make the same amount of money, if they just make another less money, they will just sell it, and then they will just wait for lower level to buy that one. That's the scenario. The traders, the trade of oil is also a commodity. People will just behave like this. Let's look at gold prices. Alright, gold prices is on free fall. As you can see here, gold prices are just pressurized by US 10-year bonds and US 2-year bonds. Even the US 2-year bonds because they are rising with the expectation of rate hike. They are just getting more value. So the reason of selling that gold and buying the bonds, they have interest rates. When you just hold the gold, you just hold the gold. There's no more extra income. But when you just when you just invest in bonds, you just get interest rate, and at the end of the bond maturity, you just get your money back. So you just in profit. If just accept like a 1.7 real yields of the bond in 10 years bond, this is 1 year. At the end of 10 years, you make 18% from your money. That just make good profit, and you just get your money back. But in gold, you just depend on the price of gold. If that goes down, you just lose the money, and then no interest income. That's the important thing. We will just expect to go down if these 10-year bonds goes like this. If we just see a resolution between Russia and Ukraine, something like this, 1750s, 1754 is on the side. Please just take this note. Just don't think that, all right, it just falls so fast, so it will just recover. All right, you're right, it just fallen so fast, but the expectation of a war has happened. That's why from this point, from the beginning of January, it has risen so fast. So it was a cycle. It's just an A shape, just rise and fall. We are at the same level of the beginning of March, or actually, Jane actually. This was all about the war scenario. If that war scenario didn't happen, we will probably see something like this in gold prices. And with the rise of US 10-year bonds, we will see those 1750 levels already. And we were talking about that one. Let me just tell you, on the weekend, head of NATO, John Stoltenberg, just told that as NATO, we won't send any military if Russia invades Ukraine. So this seems like a bad scenario, like just something. But this is what Russia wants to hear. They say, I don't want to see any NATO member country, any NATO soldier in Ukraine, in my borders. That's why they are. That's what they are expecting to hear. As long as these happen, as long as they say like this, NATO never. Russia will never invade Ukraine. That's the point. That's the point. As the market understood this well, and when they just realize that US and UK is fueling this war, everybody knows their intention just to sell more weapons. We will just see decline in gold prices. That's for sure. Alright, thanks so much for watching us. We will be together on more news, on more analysis this afternoon. Have a nice and profitable day.